It's Wednesday the 8th of July. I'm currently on the FTSE 100 and I'm in a trade. The reason I want to go over this trade with you is mainly to do with the stop that I've got on this trade and to show you how it works. So you can see my area is right here with the rectangle, the grey rectangle. That's how I always mark out areas where I'm interested in looking for reversal signals. I actually got my reversal signal right here and I entered below the low. You can see my entry, it's this line right here. Just above this zone is the round number 500 and also the pivot level. Now in the markets, quite often, even if this is the area of support and resistance which I've identified, if there's another strong area nearby, the market will often go up and tag these areas. Now what most people would do is if they entered here, their stop would be set at the pivot level. They would put it right on the pivot level, or they would put it just above the pivot level. And what do you think the market's going to do? The market's going to bounce up and it's going to stop you out. So you're either going to get stopped out on this candle or you're going to get stopped out on this candle. They do this because they either use a fixed stop, so they'll just decide to put a stop of 10, 15 points, or because they'll use a strong support and resistance line as their stop. Now what I was doing for this trade, because it had these other levels so close by, I was looking for the market to break through the round number and the pivot level, which is this strong bar here, but then what I was looking for after that would be another strong bar. And as you can see, you didn't get a strong bar. What you got was a rejection wick. Then you got another rejection wick. And then finally you got a bearish bar. This tells me that the market is not interested in staying above the pivot and the round number. The market has then fallen down. It's came back up, retested the pivot and been rejected again. So my target's down here. Now this also has to do with risk reward, because with this sort of stop, I could have been risking maybe 30 points. And I'm only looking for 13 points. So risk to reward wise, this is not technically a good trade. But it is a good trade in that I'm not just setting a stop and then letting the market take me out over and over again. I'm using how the market works, and that is how I'm basing my stop. The market will try and go for your stop because that's how the market moves. It takes out your stop and then it turns around and it makes significant moves. It's not to say this trade is going to come down and meet my target, but hopefully this has shown you a different way to do stops. I don't do this all the time, but if I have key levels nearby, I will often use this. Okay, that order has now filled. The limit order has been accepted. This is where the limit order was set. The market is pushed through and I am now out of the trade. With this stop that I've used, first of all, I just want to say, don't use this stop unless one, you completely understand how to do it. I will teach you how to do it in later videos. And two, I only use it very rarely, only when I've got this sort of thing where I've got my zone and then other zones very close by which could affect the trade. Now what would have made me get out of this trade? This candle right here. What's happening here is the market is breaking through the pivot level. There's a lot of stops here, so the market is triggering the stops, which is then pushing the candle higher. People watching this market are thinking this is becoming a breakout trade. So they are going long in the market, forcing the market higher. If this next candle had been bullish, I would have exited. I would have just closed the trade and taken the loss. But this candle is bearish. It's a pin bar. And then we have another pin bar. This is telling me that the market does not want to stay up here. So I stay in the trade and I follow the trade down. Now, if the trade had come down like this and had then started to bounce again, I would have also exited the trade, because this would have been the market breaking through resistance and resistance then becoming support. But the market falls straight back through, bounces around in this channel, and then it falls through, and it works out very well. So the purpose of this video is to point out once again that stops are very important. You need to think about your stop rather than just setting a certain number, 10, 15, 20 point stop. So the risk to reward was not ideal on this trade, but I let the market tell me what it was doing. And because of that, I didn't take a loss. I mean, 95% of people, the 95% who don't succeed at trading, funnily enough, their stops would have been right on the pivot, or maybe 4 or 5 points above it, maybe even 10 points above it. And this candle would have stopped them all out. And then the market turns around. So I hope that was helpful, guys. As always, do subscribe to Decisive Trading if you are learning how to trade. There's a lot more videos coming. I'm James Orr. Thank you.